Traders, you are pretty much screwed because there are so many strategies out there. How do you know which one is right for you? Well, let me help you guys, because we are going to look at some of the most viewed, some of the most trending strategies online to see if they actually work and if they are right for you. So let's get into it. In this vid, guys, we are going to check out this fine-looking gentleman's strategy. And you've probably seen this guy before. Again, if you've typed in Forex and strategy into a search engine, you've probably seen this guy, right? He's done lots and lots of strategy vids, and he's big into his price action and technical trading, right? Which is a good place to start. And in this vid, he claims that if he could trade only one day trading strategy, he would use this one if he could start over, right? And this strategy has got over 744,000 views and over 500 comments, right? So lots of people have tried this strategy or are currently using it. So let's see if it's any good, right? We're going to analyze his strategy. And if you stay to the end of the vid, guys, we're also going to take the criteria of his strategy and put it onto the live chart and test it. So let's get stuck into it. Let's see what he has to say.
The internet is littered with a ton of different day trading strategies, setups, and systems. And I'm not saying that some of them aren't profitable. But if I had to start over from scratch, if I was a beginner or someone struggling to make money from day trading, then the strategy I'm going to be sharing with you today is exactly where I would start.
So exactly why we're doing these vids, guys. He explains there's thousands and thousands of strategies out there. And he's not saying that all of them don't work or some do work, but he would trade this strategy. And we're going to find out exactly that, if it would work. And more importantly, guys, if it would work for you, right, and suit you as a trader. And again, I'm not here to, badmouth strategies or, make fun of people for entertainment. We're genuinely going to look at the strategy and find out, if it is a good strategy to actually use in the live markets, right? So let's get started and listen to him explain the strategy.
This specific strategy uses two different time frames. And one of these time frames is going to be used for something very specific. It's going to be used to tell me if I'm going to be buying or selling. It's also going to be used to tell me where I'm going to be buying and selling. Let me explain more about that by taking a look at the charts. As you can see here on the Canada yen, I have plotted this blue line. This blue line is the 50 EMA. So the first thing I want to see with this strategy is that price is trending above the 50 EMA. What that means is that price is consistently making higher highs, higher lows, higher highs, higher lows, and higher highs here on the Canada yen. And anytime I'm using this strategy, this has to be happening above the 50 EMA. And a lot of people get confused by markets that start to do something like this. If prices, instead of making higher highs and higher lows in a very clear way, like they are here on the Canada yen, if they were doing something like this, I would just not trade. So to keep this really simple and to keep you from having to deal with, do I need to trade or not, based on if the market is trending or consolidating, if it's not an extremely clear trend, meaning if you can't clearly see prices making higher highs and higher lows, then I just simply don't trade at that time and I wait for trend to become clear. In this case, it was a buy trade. I was looking for an uptrend, looking for prices to be making higher highs and higher lows.
Okay, so very clear, guys, right? He's looking for a H4 uptrend that's clearly trending, right? And he's also using the 50 EMA because that, if price is above that, it also indicates that price is clearly trending, right? So this is his direction. He doesn't actually mention the time frame, but this is the H4. Okay, so this is the H4. Important to point that out. This is his directional time frame. Okay, let's carry on.
At the point that I see that prices are in fact making higher highs and higher lows, then I know I'm going to be looking for buy trades. After I know I'm looking for buy trades, that's step one. Which direction do I want to trade? The next step is where. Where am I looking for those buy trades? And for this specific strategy, it's only one place. That's why this strategy is so good if you're a beginner or a struggling trader with your day trading, is because we're looking for one place to place a buy or a sell trade. Saying place that many times felt awkward. But right here at the previous high that was just broken is the area I'm looking for price to pull back to in order to place possible buy trades. So we have the direction, which is up. I want to be buying this market because why? Because we are in an uptrend. Prices are making higher highs and higher lows. And we now have the where, which is what or where? The where is the previous level of resistance that's likely to become support in an uptrend.
So this is classic price action, guys, right? We've got a trend, we've got trend and structure. This is in an uptrend. We've got support and resistance levels. And what was once a previous high becomes very good support in an uptrend, which is just demonstrated. And he is just trying to trade from that area, the previous high. So simple price action stuff. Following trend, right? So far, so good, guys. Makes a lot of sense.
So now that I've broken that down kind of on a whiteboard, let's go to the actual trade itself here on the Canada yen. So right here in market replay mode, based on the drawing I just did, what can you see happening? Do we have a valid uptrend? Well, are prices consistently making higher highs and higher lows? Yes, they are. Is it clear? Higher high, higher low. Now we just made a higher high. After I see this higher high made, my next step is going to be to point out the previous level of resistance in a zone that looks something like that. Once I have this level pointed out, I know I'm in buy mode because we're in an uptrend, and now I know where I want to be a buyer. It is in this zone we just pointed out in gray. So the next step here is to wait for price to pull back to this gray zone, and then I'm going to be dropping down to a day trading time frame in order to place my entry. So earlier I said I use 2 different time frames for this strategy. When I'm day trading, I'm always looking for trend, meaning what direction do I want to go? Do I want to be a buyer or a seller? So I look for trend on the 4-hour chart, and I also look for the structure level or the where do I want to buy on the 4-hour chart. After I have these 2 things pointed out, I wait on this time frame for prices to get into that zone. Then I drop down to my day trading time frame, which is the 15-minute chart. So if we push the candles forward here.
Okay, guys, so just to clarify, his H4 is his directional chart, the direction and where he's going to trade from. And then the M15 chart is his entry chart. And he's going to explain his entry now, right? So he's covered all the bases so far. We just need to understand his entry. And we also need to understand his stop loss and take profit and how he works those out as well. All right, so let's carry on.
Just a bit, you can see that we now have gotten into our buy zone. So at the moment I get into that buy zone, I'm dropping down to a 15-minute chart. This is the 15-minute chart. I forgot to mention this during the recording, and here we are a day later. I'm editing this video, but I wanted to let you know you can also use this on even lower time frames by looking for trend and structure on the 1 hour and looking for your trades on a 5-minute chart. So keep that in mind moving forward.
Okay, guys, so he's also explaining, right, you could trade this using the H1 for direction and the 5-minute as your entry time frame. But we later on in the vid will be testing this with H4 and M15.
Now on the 15-minute chart, I'm looking for 2 very specific chart patterns using this strategy. I am either looking for a double bottom in this zone, or I am looking for a head and shoulders pattern in this zone. Shoulder, neckline, head, second shoulder, push higher. Those are the only 2 ways I'm going to be.
Okay, so this again is, basic price action, guys. If you follow M15 structure down, right, he's saying this is the last previous high and this needs to be broken before he starts buying this particular pair, right? Head and shoulders or double bottom. He's basically looking for price not to keep going lower, right? He wants to see buyers come into the market here, sellers start to stall, and basically get a break of structure. As soon as we break this last high, that is when we get the break of structure. Okay, so Double bottoms, okay. Head and shoulders, okay. But what I just explained is the idea behind those patterns. All right. All right, let's carry on.
Entering a trade with this strategy once the other conditions I just said are met. So here on the 15-minute chart, let's push price forward and see what we get. Right here, we get a double bottom, but what I'm going to be waiting on is not just the double bottom, not just the head and shoulders pattern. I want to see a break of the neckline. I want to see a breakout showing me that buying pressure is going to continue past the double bottom. So with that being the case and that being my actual entry, I have no reason to enter yet. As we push forward, I still do not have a reason to enter the trade because we have no close above the neckline of this double bottom. So we continue waiting to see.
That's important to point out, guys, that that isn't a break because the body of the candle right here didn't break above the high. So for any time frame really, for there to be a structure break, you need to see the body of the candle close above this level. Okay, and as you can see, it doesn't. It wicks back into that level.
See what price does. We continue waiting for a close above our actual neckline on this double bottom, which eventually turns into a triple bottom and eventually does in fact break above the neckline of our double bottom. So with this being the case, we finally get a close above the neckline of this double bottom. That is my actual entry. So after all the other things are met that I'm looking for on the 4-hour chart, we have price in an uptrend, making new higher lows and higher highs. We have the previous level of resistance that should turn into support that price has now pulled back to. I've now dropped down to the 15-minute chart, and I'm looking for what? I'm looking for a double bottom or a head and shoulders pattern with the break of a neckline for confirmation. Once I get that, that is when I'm actually going to be pressing the buy button. So that's when I decided to actually place this specific trade. And we'll jump out to the 4-hour for now, hit the play button. As you can see, since doing so, prices have in fact pushed higher. And this specific trade is currently at about a 2.1 to 1 reward to risk ratio, just using this very simple strategy.
Okay, so we understand direction, time frame, we understand where we need to enter, we understand the entry criteria on the 15-minute. We just haven't had much information on stop loss or take profit, right? So hopefully we will get more information on that.
Now, you can say I wait for trend, for structure, and for chart patterns to trade. But if you do that, you're probably going to be very inconsistent in your trading, which is why it's important to create a framework that is rules for this specific strategy, which is what I'm going to show you now. I do this through a process I call CEST. It's an acronym that if you've been a part of the channel for a while, you know all too well. CEST stands for conditions, entries, stops, and targets. So for this strategy, what would the conditions be? The conditions would be 4-hour chart is in an uptrend and is pulled back to the previous resistance that was broken in this uptrend. Those are the only conditions I'm looking for this strategy. What would be the entry? The entry for this strategy would be we're in our zone and price either makes a double bottom and breaks above the neckline or makes a head and shoulders pattern and breaks above the neckline of that head and shoulders pattern. The next thing we have to do is establish rules for our stops and targets in order to be consistent. For me, the stop loss goes below the zone that I created, and I personally just manage my position on a lower time frame, which is exactly what I'm doing now. And those are the rules for a bullish version of this strategy.
Okay, so very clear, guys. Remember all those rules because, like I say, we're going to test it later. The stop loss goes below the support level in this case, or resistance level on a downtrend, and he manages the trade manually. So his target is managed manually, right? If he's seeing bullish candles, I'm sure he keeps hold of the trade. If he starts seeing some rejection candles, maybe that's when he exits, but not clear. But all in all, guys, really like the strategy because it's using simple price action, and price action doesn't lie, right? You can see the market is in an uptrend, right? That's what he uses, H4, right? You can see price retrace into a level of value but also a support level that was once resistance, the last high, right? So it makes sense. It's a really good, simple price action strategy. And this is a very common entry when it comes to trading Forex, right? We know where to put the stop loss. We know what the entry criteria is on the M15, and we know that he manages his trade to target, right? So let's take a look at a downtrend example now.
This strategy. The bearish version of this strategy is the same exact thing, just flipped upside down. Let's take a look right now on the whiteboard. So instead of being in an uptrend, let's say this is our 50 EMA. We want to see prices making new lower lows and lower highs now below the 50 EMA. When that starts to happen, instead of looking at a previous resistance, we're actually going to be looking at the previous support level that price has just broken. We're going to be waiting for price to get back up to that level. We're going to be dropping down then to lower time frames to look for either double tops or a head and shoulders pattern. And the entry will be the break of the neckline of the double top or the head and shoulders pattern. Let's take a look at an example of this on the charts. Here we have the pound yen. Prices are pushing below the 50 EMA. Are they also creating new lower highs and lower lows? Well, it's pretty clear to see that we have a high here pushing to a lower high, a lower low, an equal high, and now a lower low. This would be a good trending market to the downside, meaning I'm looking for sell trades. That's the direction I want to look for trading opportunities in now, because of the fact that we're below the 50 EMA, creating lower highs and lower lows in a downtrend. The next step is to point out the area that I see for a possible trade. That area is always going to be the recent level of support that was broken. In this case, we have this move here, back up, back down. Previous level of support that was broken is right here. Already have that zone drawn in for you. What's the next steps? Well, now we have the conditions met, right? The conditions were 4 hour shows me trend. In this case, it's a downtrend. And 4 hour shows me an area of structure like we have here that I'm going to be trading in. The next thing we wait for is a pull back up to this area. Then we take a look at entries. Let's hit play and see when we actually get into our zone. We are now in our zone. So let's take a look now on a lower time frame. So as you can see here, we've come into our zone starting all the way back here. But have we had a double top or a head and shoulder pattern that broke below the neckline of that double top or head and shoulder pattern? Well, no, we have not. We get this like double top right here, but the neckline would be way down here. We get another double top here, almost like a triple top. But in that case, we would need this level to be broken. We have not gotten any type of double top yet that's broken the neckline or a head and shoulders pattern that has broken a neckline. So let's keep pushing price forward and see if we actually get one. Here we have another double top. Okay, so now we're looking right here. This is our double top. We have one top here, followed by our second top. All we need is a break below this neckline, and we have a valid trade. So let's push the market forward one more time, and there we go. This would be a valid trade. And the way I would be looking to trade this is by placing a stop loss, depending on if the price, the top of the double top, is close to or far away from the top of my zone. If it's super far away, let's say we get a double top way down here. I'll do it over here, way down here. I wouldn't be putting my stop loss all the way above my zone. I would just go 1 ATR or 10, 20 pips, 5 pips, whatever you want to do. I would just go above that double top if it happened super low in the zone like this. But for this case, this double top happened very high in the zone. So with that being the case, I'm just going to put my stop loss right above the zone. I'm going to aim for something like a 2-to-1 and be wary of.
So there's a little bit of ambiguity there with the stop loss, guys, right? He was saying it depends where the double top happens. If it happens, lower in the gray resistance level, he might just put his stop loss a few pips above the double top. But if it happens at the top of the gray zone, the resistance level in this case, he'll put his stop loss above the actual resistance level. A little bit of ambiguity. To keep it simpler, guys, we're going to put the stop loss just above the resistance level that we've marked out. All right. But let's carry on. Let's just see this through.
My levels of structure. I see this level here as a pretty major little zone. So what I'm going to do is go in between that zone, and that's going to be my target. So there you go. The trade is set up. We have all of our conditions met. Let's hit play and see how it worked out. Oh,
Right, and there you go, guys. I'm glad he's shown you both sides of the coin, right? No strategy is going to work 100% of the time, right? He's just showing you a strategy that has worked for him over time. And he had a losing trade here, so be it. There is no strategy that gives you 100% success. So what we're going to do now, guys, is you've understand the criteria of this strategy. We know how to enter buys and sells. We know where to put our stop loss. We know the entry criteria, the target, etc. And I like this strategy, right? It's simple price action. You're using structure and trend. You're using support and resistance levels, and you're using lower time frame structure breaks in order to enter. So it ticks a lot of boxes for me in terms of a good, robust strategy to use. But let's go ahead and check it. Traders, before we look at the live charts, please don't forget to subscribe to the channel, smash that notification button, and please smash the like button. Also, guys, please don't forget to leave a comment below if you would like me to analyze a particular trader or a particular strategy. Please leave a comment below. Let's go check out the charts. So traders, in order to test this strategy to see if it can work for you, we are going to randomly select a currency pair. I'm not going to cherry pick some beautiful piece of chart where it all works wonderfully. We're going to totally randomly select the currency pair. Before we do, guys, we just need to check we're on the H4 chart, right? So check, right? We're on the H4 chart. And this blue line here is the exponential moving average 50, right? Which is what he had on his chart as well. So all we're going to do now is randomly select the currency pair, and then we're going to follow the criteria. So let's do that first of all. I'm just going to close my eyes, guys, right? And just randomly pick New Zealand dollar, Canadian dollar, right? And also what we're going to do, guys, I'm going to use the back to the future button, right? And we're just going to randomly select the piece of chart, right? Here we go. Right. So purely at random, okay, I would say we straight away have met the criteria for a downward trend, a sell trade, right? Because if we just check his criteria, remember the H4 needed to be in a clear downtrend, right? Which it is. It's clearly in a downtrend. We're getting lower highs, right? Lower lows. It's clear. Okay, we're below the exponential moving average 20. As you can see here, this is the exponential moving average 20, right? So these were the last lows, and you can clearly see there is a piece of resistance here. It was once support, and according to his strategy, if this retraces to that level, right, it will become a nice area for resistance, and we can look for sells. Okay, so just by luck, it has set up pretty much perfectly, but we don't know if we're going to retrace to this level. But let's put this level in, okay, because that is the last low. All right, and let's just move this so we can see the chart. Now, all we're waiting for price to do is retrace into that level. So let's just play price along and see if it actually retraces to that level. Right. So straight away, let's go back a candle, right? We are in at that level, okay? Right, and price has come up and hit that level. Now, we know that's the criteria. This is the where we want to enter, okay? So just to recap, H4 downtrend, clearly in a downtrend, and we've retraced to the last low in this case, right? Then we drop down to the M15. The M15 was his entry time frame, right? And I would say, yeah, we are in the process of getting a double top, right? So this is the M15 chart, right? If price comes back up to here, let's see if we get a nice bearish reaction here. Okay, so let's play this along. Okay, so I would say we've had a double top, right? I would say that's quite clear. Okay, come up once, hit it, come up against, hit it. Now, we need to break the last low, right? Which I would say is this level right here, okay? You know, some might say it's a little subjective, but is it here? No, I would say this is the last low. So I'm going to put in a level here so we can clearly see that. And remember his strategy, guys. We're just waiting for a candle to cleanly break that level, something like this. The body of the candle breaks these lows. Okay, then we can enter the trade. So let's just play it along. Okay, so this is an interesting example, right? Because if we wait for this, so we get the double top, okay, and then it finally breaks this low, okay, but he didn't make it clear as to how to enter the market, right? You know, do you wait for the close of this candle? And the answer is yes, according to his criteria. So we wait for a candle to break this low, the body of the candle. So we would start selling here and our stop loss would be above here. Now, a little bit of common sense needs to prevail here, right? It's just moved too far too quickly, okay? And I would say this trade is void as a result, okay? But let's play it out, right? Let's imagine we started selling here, right? And put our stop loss here. Now, again, the problem with this is, guys, that my target, right? If we went back to the H4, right? My target would really be back down to the last H4 lows because that's the next piece of support here, right? Maybe it can go further, but it makes sense that this level right here is your target because you can see buyers have entered at that level before. Now, straight away, I would say this trade is void because if that's your target, you're selling here, there's your stop loss, and there's your take profit, then this trade doesn't make sense from a risk to reward point of view, right? It makes no sense whatsoever. So in this example, I would say no trade. Okay, let's go back to the 15-minute and just see how it plays out for curiosity. Let's actually play this along on the H4 just to speed things up. Right, so we'd have actually gotten taken out of that trade. But as I said, this trade was void anyway for those reasons. But let's carry on. Let's look for the next potential setup. Just drawing random lines on the chart. Right, let's move this along quickly, guys, so we can actually find a piece of chart that is trending. Right, again, okay, I would say let's remove the other pieces of support and resistance. These are my supports and resistance, guys, so let's just ignore them for the time being. Again, this fits the criteria, right? We are in a downtrend, okay? We're getting lower highs, lower lows, right? So we now need the low to be here, right? This is the area we're looking at, okay? This last low. If price retraces into here, this will be a good area to sell from. Okay, so let's play it along, see if we get back into that level. Okay, so, you know, you don't even need to look at the M15 chart, but let's go back now and select this bar before it actually happens. Okay, so if we drop down to the M15 now, because we want to see price approach this level and see what actually happens, right, at this level. So let's drop down to the 15-minute chart now. We've got our level up here, and let's play this along. Right, so no trade. right? It comes up, it hits this level. You can clearly see there's no resistance here, right? Sellers are not coming into the market, and therefore we're not seeing, you know, a potential double top, which is why I fully understand why he's looking for that kind of chart pattern, because that suggests sellers are coming into the market. All right. Let's go back to the H4, guys. We're going to carry this on until we see a trade that is actually viable. Right. I think we have one right here. Right. So if I just go back to this candle, right, we're now looking at an uptrend. Okay? And obviously, guys, I've gone back in time to a totally random part of the chart to test the strategy. I don't know what New Zealand dollar, Canadian dollar did on, you know, the 27th of November 24, right? But what I can tell you is that we are now, I would say, clearly in an uptrend, right? We're getting higher lows, higher highs. We're above the exponential moving average 50, right? And this last high in here is potentially a good area for us to look at for a retrace and then buy it from there if we get the setup on the 15-minute chart. So let's just put a zone in here and include those highs, right? So this is what we're looking at, right? These are the last highs. I see price retrace into here. So let's go down to the 15-minute now, because this is our entry time frame. And we want to see how it approaches this level. And I'm really enjoying the fact that this isn't so clear cut and so easy for us to trade and find entries, because that's the reality, guys, right? You see a lot of strategies online, regardless if they're very good strategies or very bad strategies. The truth of the matter is you may not get a lot of setups, right? Now, we've had one setup that was a bit null and void, and the other one, we didn't get a setup, right? It just broke through resistance. So let's see if we get a setup here and how price reacts here. Let's play the 15-minute chart along. Okay, we have hit our gray zone, right? We have our support level. And I would say that is a double bottom, right? Again, there is a little bit of subjectivity here, but there is clearly a level here, right, that would potentially need breaking, right? So if we get a candle that breaks through that level, I think we have a trade according to his criteria, right? It would be a double bottom and a break of the last high, right? So let's play this along slowly now so we can actually see this. Okay, so again, right, this is interesting, yeah, because we're still in the gray zone. The trade is still legit, right? It's still a feasible setup. The first double bottom that we saw, right, didn't break this neckline that he calls it, basically the last 15-minute high, right? We didn't get the structure break. So let's see what happens here. Maybe we get another double top form down here. Right, so let's play this along. Okay, so I'm going to suggest that this is an entry. Okay, so we came down, right? Price come up, we come down again. We was at these lows. This is the last neckline, okay? And we broke that level. So I would suggest we can start buying on this candle, okay? According to his strategy, right? Now, we're going to start buying here, and we're going to put our stop loss below here. right? Because this is the last low on the double bottom, okay? And this is where we're at. I would say a feasible entry according to his strategy. Now, for me, guys, sorry, drawing random lines again. If we enter on the M15 according to the H4 chart, if we go back to the H4, it makes sense for me for this to be our target, right? The last H4 high. Yeah, because if we're in a H4 uptrend, there's a strong possibility or probability that price will make its way back up to this last high here, right? And that's going to be our target. So I'm going to put a line in here, and that's going to be our target. So let's go back to the 15-minute now, and our trade is set, okay? And that is roughly, we're risking about 11, 12 pips to make 27. So it's about a little bit over 1:2 risk to reward, right? Nice, okay? I think this is a legit setup according to his strategy. And let's see if this plays out. Now, before I show you if this trade plays out or not, guys, again, I have no idea. I've picked a random piece of chart. If I could please ask everyone to subscribe to the channel, smash that notification button so you receive alarms for all of our vids, guys, and please smash the like button, all right? Please don't forget to check out our website as well, www.simply-forex.com. And also, please don't forget to join our trading community. We have a free Discord channel. Come join it. You can talk to like-minded traders, share knowledge, ideas, have a wonderful time. Right. The moment of truth. Let's see if this one plays out. I'm going to whiz it along a little bit. Okay, stopped out. Okay, so in the short space that we have tested this strategy, guys, right, we've had 2 non-setups and 1 losing trade here. Okay. Now, what I'm going to do is I'm going to cherry pick. I'm going to try and find a trade that fits the criteria and looks like a good trade, guys. All right. So, guys, in this example, I've cherry picked a piece of chart, right? Because we do want to see it working, okay, and in action. Now, again, this is Euro US dollar now, right? We saw the results on New Zealand dollar, Canadian dollar, right? We can now look at Euro US dollar. Okay, now again, we need the criteria. H4 is clearly in an uptrend, making higher lows, higher highs. It's clearly trending. We're above the 50 EMA, right? Happy days. Now, when it retraces, the last high becomes the area of potential entry, right? What was once resistance becomes support. And I wanted to find a good setup because this is a good price action technical trade. It really is. Okay, so we've got our trade set up, right? Now let's drop down to the 15-minute and let's see price enter our support level. Speed it up a little bit. Right. Okay. So let's slow it down a little bit now. We're now in the gray zone. You know, arguably here, we've had a double bottom, right? These lows are holding. Now we now need to break this neckline. It's basically the last M15 high, right? It's a structure break. Okay. But let's see if we get such a break. Right. Now we have a trade, right? So ignore this last candle, right? So let's select this. Ignore that last candle. We have an entry, okay? So we would start buying at the close of that candle is how we explained it. And our stop loss would go potentially below the gray zone, right? Let's put it all the way below the gray zone, okay? So yeah, about there. And our target, if we go back to the H4, to me, what makes sense is back up to these H4 highs up here. Okay, so back to the M15. Okay, we've started to buy in here, right? There's our stop loss and there's our target. Now, again, let's just quickly check the risk to reward. So we are risking roughly 23 pips to make around 40 pips. So a little bit under 1:2 risk to reward, but nice risk to reward, right? Now let's watch this play out. I'm going to speed it up a little bit. Let's watch this play out. Right, there you go. A successful trade using that strategy. And I'm glad we had to try a few different efforts to show you this strategy working, because that's the reality of the markets, guys, right? With New Zealand dollar, Canadian dollar, we had a couple of setups that didn't make sense or didn't actually happen, and one that was a losing trade. But you can see here with Euro US dollar, we had a nice winning trade and a nice risk to reward, right? We would, if we took the small sample of trades that we took with this strategy, we would still be up because of our risk to reward. And also, guys, I like the fact that this strategy is built on simple price action, right? It's using trend and structure on one time frame, finding a nice area of support or resistance, basically a value area, and then entering on a lower time frame for more tighter stop losses and, you know, more accurate entries. So yeah, there you go, guys. Hope you've enjoyed analyzing this strategy with me. If you have, please don't forget to subscribe to the channel, smash the notification button, and please smash that like button. Please go check out the website and also check out our free Discord trading community. See you next time.